Good morning, everybody. Today is the 27th day in the month of January 2022. My name is Heritage Adisa, market analyst at HotForex. And quickly, as usual, check through the markets, see what the overall sentiment is and what the big stories driving markets, if there are opportunities or if they provide opportunities, and then how we can take advantage of those opportunities. But please always remember that this is just a communication material and nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. Now, what we have this morning in terms of the overall mood in the market is a risk of flow across board. Yes, we have risk of across board. We have equities down, hybrid currencies down, safe haven currencies higher and supported as well. Now, that's what we have. Now, I had this written down earlier. I said risk of sentiment, risk of market environment, right? Hawkish Fed, right? Yesterday evening, we had a Federal Reserve, the FOMC meeting, right, where they came out more hawkish, right? I had this written, said hawkish Fed tilts markets risk off as they signal incoming rate hikes, right? Which could even start from March, right? I wanted to say Powell had said that inflation had gotten worse during his press conference, and then there was even room to hike without limiting labor market expansion. Now, one of the things that markets have been looking at to be a middle ground for the Federal Reserve or a tight spot for the Federal Reserve is trying to hike rates, right, in an environment where growth is expected to slow, right? Now that he has said that there's room to still hike without having to dampen or slow down, talking about growth now from the labor market as well. That also shows that they can and they will, and it's even coming in fast and hot. And then this as well has led interest rate futures market to pricing about 5 interest rate hikes for this year, right? And then all of this has seen equities down across board. We had equities jump down across board, because they've said inflation has gotten worse. So hiking interest rates obviously is not good for businesses, and then obviously that's why you're seeing equities negative, equities generally, equities down, hybrid currencies down as well, while safe haven currencies lead the FX majors, right? Previously, yesterday night we had data for New Zealand, that's inflation CPI, right, for New Zealand came out better than expected, about 30 plus years, a year high as well. And obviously that sends signal that rate hike expectations could even come faster and bigger as well. But leading markets to some pricing even faster rate hikes from the RBNZ for New Zealand, but risk of pressures the currency seriously, and then it's even lagging amongst the major FX so far. In the equity space, down across board, US 500 futures down about 1%, although currently at support, right? US oil. Now, US oil, despite the risk of, still keeps really supported, at least compared to the downside we've had in equities, is really kept resilient, right? Holds its ground despite the risk of. Now, the reason for this is, as the Russian and Ukraine tension continues, across, right, obviously it could disrupt oil supply even further, and that is good for price. So we've seen oil prices keep resilient so far, and that's helped the Canadian dollar also keep supported so far. Currently trading above the $85 per barrel level, right? The VIX jumps back up, now back at 30. I was looking for VIX to come back lower, I think over the last 2-3 sessions, right? When we were talking about, I think it was on Twitter when we were talking about, that particular one. And then I remember saying I wanted lower from there. It came down lower, but now this Fed meeting has pushed it back up again, right? Bond yields, US 10-year bond, rather, US 10-year bond has also fell on the back of the meeting yesterday evening, right? Yes, this morning we are seeing a little bit of crawl back, but then we had a downside on the back of rising yields as well. On cumulative strength, the dollar is obviously leading the majors, about 2.25% so far. JPY also following suit, as well as the CHF, all in line with the risk of environment that we have. While on the other hand, we have NZD lagging the most, right? About 3.76% cumulative weakness across board, right? AUD follows suit. The card is the next, although you can see it's just by 0.11%. Obviously, resilient oil prices keeping it supported so far. NZD USD is down about 0.74%, right? We'll talk about technicals now when we get to the chart. So looking across board just to see what we're talking about, right? Quickly. Right, so while this loads up, let's just look at this technicals. the charts. Oh, good. Now, yes, we will talk about the downside that we've seen so far on the likes of equities. This is the US 500, right? We've seen downside flow into this session. First of all, we had the FOMC flush to the downside, a little pullback. We had another flush to the downside. Now we are seeing a little pullback, right, towards the lows of this is Tuesday, right? And then we could see another continuous downside because of the current risk of environment that we have. Let me clean this up a bit. See how to get this off my screen, right? Now, we could look at this just a little bit, right? Okay, while this loads up, it's taking a little bit of time to load. Okay, now we have this. Well, in the meantime, okay, I think we're back. Now, looking at equities, now you could look at equities, yes, downside. We've had a lot of downside going in from the start of the year, really continuous pushes, lower on the back of that. And now in today's session, when we see that downside already push and we've pulled back to this level, yes, we could look at this as another potential, area for sellers to look for the downside on this particular one. But even with that, there is a support level that we need to be very watchful about. Now, this level goes back or tracks back as far back as June of 2021. You can see resistance here, support. So in as much as yes, risk off, yes, we could look at this level. I'm being very careful selling into the lows. As a matter of fact, we're heading into weekend, heading into month end, right? And after the kind of downside we've had this month, nothing really says we can't see pullbacks, from this particular level. So there's that to also watch out for. I'm going to be very watchful of that level as well. And it's also a very similar story across other bounces as well, especially on the US side, right? All bouncing off support levels so far. And then you can see in this particular case as well, we're also at support around 1400. And if you look at that level as well, was also previous support, going back, previous resistance going back to April 2021. So at all these levels, after the kind of downside that we've seen this month, I'm really feeling very weary, right? Trying to sell at this level. Obviously, we could wait for pullbacks. I mean, these are also key attractive levels, that we could look out for. We might not get this in today's session, but obviously, this will be more attractive selling levels if sentiment keeps being negative, right? The same story around the US 30 as well, right? Also bouncing off support around here as well, right? This is around the 33,500. You can see previous support going back to 2021, around April thereabout. So in as much as, yes, we could look at this as downside risk off, I'm being a little bit very cautious trying to sell into lows like this. I'd rather wait for, stronger pullbacks like we had on this particular one, which was nice. But that was early in the week. Just let this load up a bit. That was earlier in the week. That would have been a preferred level. I wouldn't want to sell at this level. If I can get a pullback back into this region, anything back around here, then I would be attracted to this and looking for downside on this particular one. In terms of currencies, or before we go to currencies, oil, like I was talking about, has kept resilient, right? Kept that strength, really holding the $85 per barrel level, right? Because of the tension from Russia and Ukraine, and all of that has kept oil prices supported. Why? Because if that continues, it could limit oil supply, because Russia is one of the major exporters of oil, and then the US is looking for ways to shield Europe from depending on Russian oil. If that starts to escalate, so obviously it could disrupt oil supply in a way, and that is obviously good for price. So that is keeping oil prices supported, right? Keeping it resilient and obviously helping the card so far, right? The dollar index is also keeping resilience, pushing higher, right, on the back of hawkish Fed as well. And like you can see on the chart so far, while this loads up, all right, you can see pushing higher so far, obviously seeing strength in the dollar as well. One more thing. All right, the VIX, yes. Now, the VIX, like I was talking about, quickly, why is it taking so much time to load today? All right. Now, the VIX I was talking about, yes, has pushed higher. Yes, on the back of the risk off that we have. We saw it yesterday evening. So yesterday evening jump up on the back of the Federal Reserve, and then today as well we've pushed higher. But even with this, I keep mentioning these levels as technical, blockades in our path, right? If you look at this particular one as well, this 30 level has also served as resistance, or it's also serving as resistance, and we're seeing some form of pullbacks here. So despite the risk of, I'm not really interested in chasing, some of these risk assets lower and even the VIX higher on this particular one. You can see every time it got back to the 30 level, we have seen some form of pullbacks. And considering today is Thursday, heading into weekend, heading into month, and after the kind of rally that we've seen this month, I mean, pullbacks are not really ruled out, and it's something that I'm paying so much attention to. In terms of FX, right, starting from JPY crosses in line with the risk of environment that we have. Just quickly. Let's see. All right, starting from JPY crosses, right, in line with the environment that we have, right? AUD JPY, yes, we've seen downside in today's session, but now we're bouncing off support level around this key 81, dollar, 81.00 level. So obviously, if I want to even sell this in line with the risk of environment, I want to be looking to sell from here. Any rotation back towards maybe this 81.5, overall level, or back into this, this level really. Let me see how far away the moving averages are, hourly moving averages. I think that would be a more attractive level to pay attention to. But apart from that, I wouldn't be looking to catch this at this level. Okay, good. Anything back towards this 81.5 level, also coinciding with both the 150 hourly moving averages, right? I would prefer that in terms of looking for further downside on this particular one. Currency pairs like NZD JPY. It's taking so much time. Okay, NZD JPY quickly. Right. So NZD-JPY is also another interesting one. Yes, downside has been seen in today's session. We're more or less pulling back. If I can get anything back, we're back in this region. I mean, previous supports going back to 24th of Jan, 25th of Jan as well. We could look at this as a potential, level for downside. But considering that we've moved so much today's session already, 77, pips already so far, right? From the ATR, considering the CPI as well, hot CPI that we had for New Zealand as well, I'm feeling a little bit, very, very uneasy with stuff like this. I would prefer a pullback, maybe back towards this, round number around 76.00. Maybe anything back towards that level would give me more confidence. But for now, I'm being a little bit picky, with the kinds of trades that I'm looking at taking around here so far, right? Going over to for CAD, right? For CAD, with resilient oil prices, I'm being a little bit patient with this. I'm not looking to jump on this, and I'm just, looking to wait this one out. So I'll prefer looking at AUD-JPY on a pullback or a break below that level, looking at NZD-JPY on a pullback towards 76, right? Before looking to take this. For CAD JPY, like I said, resilient oil prices is keeping me a little bit numb. We're back towards open levels as well on this particular one. So I would like to leave this. For USD, looking at USD, NZD USD, we want to look out for, although, we would have, this would have been the perfect entry, although definitely we're not awake at this point in time. This was way into Asian session, right? We had a break below it yesterday after the FOMC. We had a retest early Asia, previous lows going back to 25th of Jan, right? Super interesting one there. Also going back to 24th of Jan as well. Super nice retest, and then push lower. This is a classic one. If you look at this as well, this was about, already a 60 pip run on this particular one. Now we are back at support around the 66 level, right? If I was going to look at this, I would prefer, right? I'll prefer looking for a pullback. If we can get a pullback or a rotation up back towards, this is really far for today's session as well. But if I can get anything back towards this round number or towards this lows again, maybe that will now make it, attractive for me, because I don't want to be seen selling at the lows, especially at, heading towards the weekend. Finally, we'll also look at AUD USD. This is one that is attractive of all of them. I think most attractive. Yes, we've already cleared out this key round number around 0.7100, right? Previous lows going back to 24th of Jan. If sentiment keeps being negative, I would like to see a pullback towards this region, retest, and then further pushes to the downside on this particular one. On the calendar, it's we're expecting advanced GDP for the US, right? This is the first print, right? The first signal for GDP. We have this, we have the final print, and then we have preliminary prints as well, right? So I would like to see this one, how this one comes out. If it comes out also super good, right? That obviously gives the Fed more, more leeway, more room, to hike, or more confidence in hiking in terms of, global recovery, economic recovery for the US, right? So that would be what we're paying attention to in today's session. Mostly is sentiment, right? In as much as we have risk of, yes, high beta currencies are weak, pay attention to those key levels, right? Technicals as well could play a good role, especially heading into the weekend after such a bloody month that we've had for the likes of risk asset like the equity. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask. I would always always do our best, to help. Thank you. Do enjoy the rest of your trading session. Goodbye for now.